Most Nigerians who invest on the NGX lose money in their first year. Not because the market is bad. Because they buy the wrong stocks for the wrong reasons. This video is about the right ones. Quick note, this is education, not financial advice. Always do your own research. At the end of our last video, Kemi got a dividend notification on her phone. She called Sola immediately. "I just got paid for doing nothing," she said. Sola laughed. "Now you understand why I started." Then Kemi asked one more question. "Which stocks are actually worth buying? Where do I start?" Sola smiled. "That is exactly what I am going to show you. They taught you how to work for money. Nobody taught you how to make money work for you. That changes today. Before we go into the stocks, 3 questions. Every stock we discuss passes all 3. 1. Is the company consistently profitable? 2. What does the P/E ratio tell us? The P/E ratio tells you how much you are paying for every unit of profit a company makes. Lower P/E generally means better value. 3. Does it pay dividends consistently? These 3 questions are your filter. Use them on every stock you ever consider. Now, let's apply them. Dangote Cement. 6 out of every 10 bags of cement sold in Nigeria come from Dangote Cement. Consistently profitable, yes. Over a decade of strong earnings even when the broader economy contracted. P/E ratio, trading at a premium, justified by 60% market dominance. Pricing power that protects margins when costs rise. Dividends, between 60% and 100% of annual profit paid directly to shareholders every year. The risk, energy costs. When gas and diesel prices spike, margins compress. But energy spikes are temporary. Market dominance is not. This sits in your 60%, the stable core that pays you while you wait. GT Company. GT Company has been profitable every single year for over 2 decades. Recessions. Oil crashes. COVID. Naira devaluations. CBN policy reversals. Through all of it, consistent profit. P/E ratio, low relative to the quality of the business. The market is offering you a discount on a premium company. Dividends, twice a year. Most Nigerian companies pay once. 2 payments per year means you see results faster. For a beginner that matters more than people realize. The risk, regulatory. CBN policy changes can affect bank earnings overnight. But GT Company has absorbed every one of those shocks and kept generating profit. This also sits in your 60%, balancing Dangote Cement. When one has a tough quarter the other usually holds steady. MTN Nigeria. How much did you spend on data this month? You have been paying MTN since your first SIM card. Every recharge. Every data subscription. Every OTP your bank sends you. Did anyone ever tell you that you could own a piece of that company? MTN Nigeria commands over 35% of the Nigerian mobile market. Nigerians cut food before they cut data. That makes its revenue one of the most stable on the NGX, P/E ratio, higher than the banks, reflecting its growth profile. Will Nigerians use more data in 5 years than today? Almost certainly yes. Dividends, paid and growing year on year since listing. The risk, regulatory fines and currency exposure. Dollar-denominated costs hurt when the naira devalues. Patient investors who understood this held through those periods and recovered. This sits in your 30%. More risk. More growth potential. So which one do you start with? Complete beginner, start with GT Company. 2 dividend payments per year. Clean numbers. Most forgiving entry point on this list. Want a dominant blue chip, Dangote Cement in your 60%. 6 out of 10 bags. Up to 100% dividend payout. Comfortable with growth risk, MTN in your 30%. You already pay them. The question is whether you stay on the paying side or move to the earning side. You do not have to choose just one. The 60/30/10 rule exists so you can hold all three, each one covering the weaknesses of the others. Here is your challenge this week. Pick one stock. Look it up on the NGX website or your brokerage app. Find the most recent annual report. Check the dividend history. Run it through the 3 questions. You don't have to buy today. But you have to look. Because looking is how it starts. Drop in the comments which stock you want us to break down next. We will build the next video around what you actually want to know. Subscribe so you don't miss it. Smart moves. Real wealth.